Welcome back to the WWG series on disability insurance. In our last video, we discussed the importance of disability income insurance. In this video, let's explore the process of obtaining it and understanding the crucial differences between group and individual coverage. Before diving in, assess your financial situation and your lifestyle. What level of coverage do you need to maintain your standard of living if you cannot work? Essentially, how much income do you need to meet the minimum requirements and the minimum expenses of your life? Understanding this and understanding your needs is your first step. A financial planner can be your guide in this journey. They can help you navigate the complexities, analyze all the policy options, which are many, and tailor a plan that aligns with your unique circumstances. Because not only do you want to obtain a policy, but then there are a lot of different features within the policies that you need to select as well. There are short-term and long-term disability policies. Short-term covers a portion of your salary for a limited period, while long-term provides coverage for an extended duration. Consider both based on your circumstances. And I'll add to that long-term disability is usually a lower benefit through your employer. Short-term is a lot more generous because it's so much more common. And that's even what a lot of mothers will use when they go out on maternity leave. They'll exhaust their short-term disability policy before they start to use their PTO. Now, let's talk about a crucial distinction: group versus individual disability coverage. Group coverage is often provided by your employers. While it's a valuable benefit, it's essential to recognize that it has limitations. Group policies might offer a basic level of protection, but they may not be sufficient to cover all of your financial needs in case of a disability. This is where individual disability income insurance shines. Unlike group coverage, individual policies are tailored to meet your specific needs. They provide a higher degree of customization, ensuring that you have comprehensive protection that aligns with your unique circumstances. I actually have just some highlights here, but we have group coverage versus individual. So group typically is 60%, and this is for the long-term disability that I mentioned, whereas your individual coverage can cover the gap if 60% of your income isn't enough. That 60% usually only also covers your base salary. So if you receive any type of bonuses or stock awards, those are not covered with the group coverage. Group coverage is lower cost. It's like buying in bulk, whereas your individual policy that you're just buying on your own is going to be a higher premium most of the time. The group coverage is for any occupation definition. So what this means is that if you are unable to work at all, the policy will pay out. But if you're partially disabled, or if you're unable to work but maybe not as skilled of a job, you will not receive the group benefit. You have to be completely disabled most of the time with group coverage. Whereas with individual, they offer definitions like own occupation. And so this is where if you are a doctor, for example, or a lawyer, and you're no longer able to be a doctor or a lawyer, you will receive the full payout. You have little to no underwriting with group coverage. If you enroll right away when you're employed somewhere, there is no underwriting. If you enroll during open enrollment, then you typically have to answer a few health questions, but it's a very accelerated underwriting. Individual, there's individual and accelerated underwriting. So what happens with individual is that you have to answer a lot more health questions, but if you are in decent health, they don't always require you to complete an assessment, a physical assessment. The group coverage is paid through payroll. There's no other option on that. And then your individual policy, you can pay monthly, quarterly, annually, and it's completely dependent upon you. You choose how. And then lastly, group is an all or nothing benefit. So what that means is that you cannot receive a partial benefit with group coverage, but with individual coverage, if you're partially disabled and you have at least a 20% reduction in earnings, you can receive a prorated benefit of your individual policy. So that's just some basics on group versus individual coverage. In our next video, we'll dive into what disability income insurance covers. Make sure to subscribe so you don't miss out on these valuable insights. This is Whitney Emanuel from Whitney Wealth Group, signing off.